Hey everyone, welcome back to Corporate Decoder, the place where we see that even the most boring documents have juicy secrets. Today we are diving deep into the financial world of Putnam, California tax-exempt income fund's latest SEC filing. And let me tell you, there are some big changes and interesting numbers to unpack. Before we start, if you appreciate getting straight insights from these corporate filings, make sure you are subscribed. We also have a Discord community linked in the description below where we break down more of these amazing documents. This report is all about the Franklin California Municipal Income ETF, formerly known as Putnam California Tax-Exempt Income Fund. Think of it as a financial report card for the year ending the 30th of September 2025. It tells us how the fund performed, what costs investors faced, and some pretty significant changes happening behind the scenes. Let's talk about costs first, because nobody likes paying more than they have to. For a hypothetical investment of $10,000, class of shares cost investors $85 for the year. That is 0.85% of the investment. Compare that to Class C shares, which cost a hefty $159, or 1.60% of that $10,000. Class R6 and Class Y shares were way cheaper, costing only $60 or 0.60%. So picking the right share class can make quite a difference. Now for the performance, for the year ending the 30th of September 2025, Class of shares actually lost 0.41%. That might not sound like a lot, but it is when you compare it to their benchmark, the Bloomberg Municipal Bond Index, which returned a positive 1.39% for the same period. That means the fund underperformed its benchmark. Here is what they say contributed to the fund's performance. Top contributors included security selection for AA-rated bonds, and being overweight in BBB-rated bonds. On the flip side, top detractors were overweight duration, meaning they held bonds that are more sensitive to interest rate changes, and security selection in BBB-rated bonds. Essentially, some of their investment bets did not pay off as expected. Looking at the long-term performance for Class of shares, a $10,000 investment made 10 years ago, back in 2015 would be worth about $9,600 after sales charges, or about $10,000 without those sales charges, by September 2025. That is not exactly a roaring return over a decade, especially when the benchmark index actually grew a bit more. This tells us that consistently picking winners has been a challenge for this fund. The fund manages a significant amount of money, with total net assets sitting at over $636 million. That is a lot of investor capital. Now, this is where things get really interesting. The report details some major changes. Back in November 2024, Putnam Investments Limited, a sub-advisor, merged into another division of Franklin Templeton. Then, there are changes to the portfolio managers. But the biggest news is about the fund itself. This sounds like a pretty big deal. The fund is being converted into an exchange-traded fund, or ETF, called Franklin California Municipal Income ETF. This reorganization is expected to happen around October 2025. This means shareholders of the old fund will become shareholders of the new ETF. Also, they stopped accepting new investors in August and September 2025, which often happens before a major structural change like this. Let's hop over to the financial statements, which are the real meat and potatoes of these reports. Remember those costs we talked about for Class of shares. The total expenses to the fund were $2.8 million in management fees, out of that $636 million in assets. Expense reductions were minimal. Over the year, the fund had a net investment income of over $23 million, but significant losses from investments, both realized and unrealized, ate into that. Looking at per-share operating performance for Class A, the net realized and unrealized gains or losses fluctuated quite a bit over the years. For the year ending the 30th of September 2025, it was a loss of 0.29 per share. This is a critical number because it directly impacts the overall return experienced by investors. Now, let's look at what they invested in. The vast majority of the fund's assets, over 101% of its investments, were in municipal bonds. This is expected for a fund focused on tax-exempt income. Within that, California municipal bonds made up a massive 99.1% of the portfolio. This means the fund is heavily concentrated in California's municipal debt. This entire report points to some significant shifts for this fund. The fact that it is converting into an ETF and has seen a substantial drop in assets from over $762 million in 2024 to $636 million in 2025 shows that investors might be pulling back or that the fund's strategy is evolving significantly. The net assets have decreased, and the underperformance against its benchmark in the last year is a clear sign that the fund has struggled. My take on this is that this fund is going through a major transformation. The conversion to an ETF aims to modernize its structure, which could be positive in the long run for liquidity and trading. However, the recent performance hasn't been stellar. Especially when compared to its benchmark, the heavy concentration in California municipal bonds also makes it very sensitive to the financial health of that state's municipalities. A major risk here is that if the California municipal market faces significant downturns, this fund will be hit hard. While the shift to an ETF structure might offer some benefits, the underlying investment performance needs a serious boost to regain investor confidence. We are seeing a fund trying to reinvent itself. The question is whether this transformation, coupled with better investment decisions, will translate into better returns for shareholders. Alright? That is our breakdown of the Putnam California Tax-Exempt Income Fund's latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.